Well, I've always been a bull on gold over the longer term, meaning a period of years rather than months or even quarters. But more recently, I think I've decided to make that increase that exposure to gold because of a couple of different things. My colleague and precious metals expert Larry Edelson has been very bullish on gold and gold miners because of the geopolitical turmoil we're seeing, sort of the cycle of war that he sees upcoming in the global economy. But I'm more of a monetary guy, and my reason for beefing up gold exposure is rather simple. I think that inflation is stirring again, and you have the Federal Reserve that's kind of stuck in this hyper-Keynesian fight the last crisis mentality when they really should be shifting gears to a tighter monetary policy. So I think the Fed may be behind the curve on inflation here, and that's my primary reason on my side of the ledger for increasing the gold exposure in the portfolio. Well, you look at things like job growth. We've added more than 200,000 jobs to the U.S. economy for 5 straight months now. That's something that hasn't happened since 1999 to 2000, a streak of 5 months at that time when the economy was pretty strong. We have unemployment that's down to that 6.1% area, and even if you use the all-in unemployment rate, that includes people who are working part-time but would rather work full-time and those who are discouraged, that jobless rate's down to the lowest since October 2008. So essentially, we've put the depths of the economic and credit market crisis behind us. The job markets is improving, although not gangbusters, and you can see in the inflation data, whether it's the headline inflation, core inflation rates, those are ticking up on the official measures. And frankly, we all know that everything from college tuition to gas and oil to food and health insurance and rents, all those things are climbing. So I think our personal inflation rates, what you and I see every day, are much higher than what Washington claims anyway. Sure. Well, gold is one of those tangible forces, tangible metals that's been valued as inflation protection and as a hard asset, a source of money and preserving value for thousands of years. Whenever we see money printing pick up and we see the economy pick up, you tend to see inflation pick up, which is what we have here. So this is really a new and evolving economic environment, and I think it's one that requires you to have inflation protection in the form of gold to preserve your purchasing power. This has been Mike Larson with Money and Markets. Thanks for listening.